On July 28, 2026, JPMorgan, Goldman Sachs, BlackRock, and Vanguard did something they've never done before. They tokenized real stocks on the same day. We're talking billions of dollars in assets, and it changes everything about how Wall Street moves money. JPMorgan kicked things off by tokenizing a portion of its Invesco QQQ Trust holdings. QQQ tracks the Nasdaq 100, and it's one of the most traded ETFs in the world. They held those shares at the DTCC, the central clearinghouse for U.S. securities, and then created digital tokens representing ownership. But JPMorgan wasn't alone. Goldman Sachs, BlackRock, Vanguard, and the New York Stock Exchange all joined in. Even crypto-native firms like Circle and Kraken's parent company Payward participated. This was a coordinated industry test of tokenized equities. The working group behind this service includes BlackRock, Circle, Morgan Stanley, Nasdaq, Kraken, and Robinhood Markets. That's right, Robinhood, the retail trading giant, was at the table. This is about bringing tokenized stocks to everyday investors. Why does this matter? Because the DTCC, the Depository Trust and Clearing Corporation, is the backbone of U.S. securities settlement. If they're now supporting tokenization, it means traditional shares can live on a blockchain while still being convertible back to regular stock. No more walled gardens. This move puts direct pressure on crypto-native firms like Ondo Finance and Securitize. Both companies built high-profile partnerships with BlackRock and others by moving faster than legacy infrastructure. Now the incumbents are catching up, and they control the settlement layer. Let's talk numbers. The QQQ Trust has over $200 billion in assets under management. Even tokenizing a small percentage represents billions of dollars moving onto a blockchain. And this is just the start. The DTCC handles trillions in securities every day. The key innovation here is that DTCC allows these tokenized shares to be converted back to traditional shares at any time. That solves the biggest fear of institutional investors: liquidity and settlement risk. You get the efficiency of blockchain without losing the safety of the existing system. Circle, the issuer of USDC, was involved in providing the stablecoin settlement layer. Kraken's parent Payward brought crypto exchange expertise. This is the first time we've seen traditional banks and crypto-native firms collaborate on this scale for equity tokenization. What does this mean for you? If you use Robinhood, Coinbase, or any major exchange, you could soon trade tokenized versions of Apple, Tesla, or Nvidia stocks 24/7, with instant settlement. No more waiting for T+2. No more market hours restrictions. But it also puts pressure on crypto-only platforms. If you can get the exact same Apple stock as a token on a regulated exchange, why buy a synthetic version on a DeFi protocol? The incumbents are using their regulatory moat to compete. This isn't just about stocks. The same infrastructure can tokenize bonds, real estate, commodities. BlackRock CEO Larry Fink has been vocal about tokenization being the next generation of markets. Now his firm is actually doing it. Goldman Sachs has been experimenting with tokenization for years, but this is different. By working through DTCC, they're using the official settlement system. That means regulators are on board. The SEC and CFTC have been watching closely. Vanguard, known for its conservative approach, also participated. That's a huge signal. If Vanguard is tokenizing assets, the entire ETF industry could follow. Imagine Vanguard's $7 trillion in assets moving onto blockchain rails. The New York Stock Exchange itself was involved. NYSE has been exploring blockchain for years, but this is the first time they've actively supported tokenization of listed securities. They want to be the home for digital assets, not just traditional stocks. Robinhood's involvement is particularly interesting. They recently launched their own Layer 2 chain called Robinhood Chain, which supports global stock trading and AI-powered crypto investments. Tokenized stocks from DTCC could integrate directly into that ecosystem. Meanwhile, Meta just rolled out digital dollar payouts for global creators using stablecoins. And Coinbase CEO Brian Armstrong says remittances will cost zero because of stablecoins. The entire financial system is converging on blockchain. But back to the main story. The DTCC tokenization test included not just equities but also the ability to settle in USDC. That means you could buy tokenized Apple stock with a stablecoin, and the DTCC would handle the conversion on the back end. Why is this happening now? Because the Clarity Act is advancing through Congress, providing a regulatory framework for digital assets. With legal clarity, institutions feel comfortable moving real assets on-chain. The timing is no coincidence. The market reaction was immediate. Bitcoin dropped 3% on ETF outflows and macro caution, but tokenization-related tokens like Ondo's ONDO saw increased volume. The market is pricing in a future where traditional assets dominate the blockchain. What about the crypto-native tokenization platforms? Ondo Finance and Securitize have been the darlings of institutional DeFi. They partnered with BlackRock to tokenize money market funds. Now DTCC is doing the same thing with stocks, and they have the settlement infrastructure. But Ondo and Securitize have advantages. They're agile, they can innovate faster, and they already have relationships with crypto-native investors. The battle for tokenized assets is now a two-front war, incumbents versus insurgents. JPMorgan's involvement is especially significant because they've been building their own blockchain, Onyx, for years. They've processed over $1 trillion in repo transactions on Onyx. Now they're connecting Onyx to the DTCC system. Goldman Sachs brought their tokenization platform GSDAP. BlackRock used their Aladdin system to manage the tokenized assets. Each firm used their own tech, but they all settled through the same DTCC infrastructure. Interoperability is the key. For retail investors, the biggest change will be trading hours. Tokenized stocks can trade 24/7/365. No more waiting for Monday morning to react to weekend news. Robinhood and other brokers could offer round-the-clock trading on tokenized shares. But there are risks. Tokenization introduces smart contract risk. If a bug in the DTCC's token contract is exploited, billions could be at stake. However, the DTCC is one of the most secure financial institutions in the world. They've never had a major breach. Another risk, regulatory fragmentation. If the SEC treats tokenized stocks differently than traditional stocks, it could create arbitrage opportunities and confusion. The Clarity Act aims to prevent that, but implementation is still underway. What happens next? Over the next few months, expect more tokenization pilots. The DTCC working group plans to expand to bonds, ETFs, and even real estate. By 2027, we could see trillions of dollars in tokenized assets. This is the biggest story in finance right now. Wall Street and crypto are no longer enemies, they're merging. The tokenization of real stocks by JPMorgan, Goldman, BlackRock, and Vanguard is a historic milestone. Subscribe to stay ahead of the curve.